Hey guys, it's Jay from J&D's Retirement Journey. Hope everyone's doing well. Please hit that subscribe button. My goal is to get to 100 subscribers by the end of the year. And don't forget to hit that like button. Thanks so much. Hope everyone's doing well. Let's take a quick look at Realty Income, the monthly dividend company. You know, I love my dividends. How did they do in the first quarter of 2023? All this information is right off the Realty Income Investor site. So you guys do your research, talk with your financial planner. I'm not a financial planner before you decide on investing in any security. The company description. The monthly dividend company is an S&P 500 company with over 54 years. Our investors have enjoyed monthly dividends which have steadily increased over time. The monthly dividend is supported by the cash flow from over 12,400 real estate properties, primarily owned under long-term net lease agreements with commercial clients. The company was founded in 1969 and became a public company in October of 1994. Symbol O. Annualized dividend 306 as of May 2023. They pay about 25 cents a month, which is great. A yield of 4.8. Compound average annual return 14.6. That is great. Compound average annual dividend growth, and they increase that dividend 4.4%, which is also beautiful. Let's take a quick look at the company highlights as of March 31st, 2023. Looks like the company's doing really well. Net income available to stockholders was $225 million, 34 cents per share. As we go down the list, you could take a quick look yourselves. At the end of the list, they acquired 450 single-tenant convenience store properties in the U.S., which is great. Now we look over here, the total revenue is up compared to last year at this quarter, first quarter. Net income up. The net income per share stayed the same. Funds from operation up. Funds from operation per share up 2 cents. Everything seems to be up. Adjusted funds from operation available to common stockholders up, which is great. This company's doing really well, running on all cylinders. Quote from the CEO. Our first quarter results represent continued momentum in our business, which is great. During the quarter, we invested approximately $1.7 billion in high quality real estate at a cap rate of 7%. We are increasing our 2023 acquisitions guidance to over $6 billion. What that means, guys, is more dividends. Great news. This chart compares their performance to the major stock indexes. Their compound average annual total return looks like from 2009 to year to date, 2023 here, 14.6%. The only one that comes closer at 10.3% is the Dow Jones. And on the right here, you can see how diversified they are. They're top 20 clients. This chart breaks down the value of 1,000 shares invested in 2012. If you reinvested the dividend, you would have over $80,000, which is great. And the kicker to this, the growth in annual income. It grew 68%, 7.6 yield on cost. The dividend keeps going up and the money keeps flowing in. This is a great company, guys. I love my dividends, guys. 120 dividend increases since 1994. 102 consecutive quarterly increases. 634 consecutive monthly dividends paid for 54 years. Representing over $11 billion in dividends. Wow, this is great. Increased income equals increased investment return potential over time. The longer shareholders own Realty Income, the higher their yield on cost potential, the greater the increase in dividend income and the greater the potential for enhanced returns. This is just great. I love this company. This slide just goes over the company highlights. A lot of the same stuff I spoke about in this video. Historically stable cash flow supported by high quality real estate portfolio. Careful underwriting and acquisition. Long initial lease term. Strong underlying real estate quality. This is great stuff. And now we go over here. You could see their top 20 clients. They got Dollar General, Walgreens, 7-Eleven, Family Dollar, Wynn, FedEx, LA Fitness, B&Q, Sainsbury, BJ's, Kroger, Lowe's, Tesco, Regal, Red Lobster, AMC Theaters, Tractor Supply, Lifetime, Walmart, Sam's Club, CVS, Pharmacy. Guys, don't forget to subscribe, hit that like button. I'm trying to get to 100 subscribers by the end of the year, guys. As you can see from this slide, significant liquidity and low borrowing cost support enhanced financial flexibility. Good stuff. They are the global leader in fragmented net lease sector, as you could tell here. Size, scale, and quality, which is great. Now we go into the investment thesis. 14.6% compounded annual total return since 94, which is great. Constantly increasing the dividends, stability and growth of earnings, positioned for continued growth. It's going in the right direction, guys, this company. This information, again, is right off the Realty Income website, which is great stuff. Do your research, talk with a financial planner before you invest in anything. The key takeaways here, Realty Income's track record illustrates superior total return per unit of volatility. Our external growth opportunities are broad. They invest in a ton of geographies around the world. They just merged with VEREIT, created the premier net lease REIT. Strong balance sheet, access to low-cost diversified capital. This is all great stuff, guys. Hey guys, Realty Income is at 58.44, 52-week range, 55.50 to 75.11. This stock's on sale, guys, due to the debt ceiling. The stock market keeps going down. Start grabbing all these good companies that are on sale. You know, it's you got to take advantage, build that dividend snowball. Let's take a look at the 5-year chart. This information is right off the Charles Schwab website. They're up $7, 13.78%. The historical earnings, they have beaten the last 3 quarters, which is great. Now we roll into the fun part, the dividends. It stands at 0.255. Next pay date, June 15th. You still have time to get in. May 31st is the X date. The annual dividend yield is 5.8%, which is great. Let's see what the analysts are saying about this company. 8 holds, 6 outperforms, 3 buys. S&P Global has a buy rating and a $70 price target. We go over almost 80% of this company is held by institutions, which is great. 39 billion market cap, shares outstanding, 6.73. Good luck, guys. And again, do your research. Talk with your financial planner before you invest in anything. May you make a ton of dividends.